Hello and welcome to the Rand Squawk Weekly Wrap. We'll bring you the summary of the themes of trade in the last 5 days and everything to look forward to in next week. The primary theme of the past 5 days has been particularly risk-averse, with Asian, European and now US equity markets looking to close lower on the week. This week has been slightly more data-focused, particularly towards the latter end, with US non-farm payrolls coming in distinctly below expectations. However, the lacklustre data is not restricted to the US, as manufacturing PMIs from Europe and China continue to come in below expectations. This has weighed upon sentiment throughout the week, being added upon by a lack of tangible progress by European leaders on a growth strategy for Europe. As such, we have seen euro-dollar move below the 123.00 mark to the downside, and elevated bond yields on the peripheral countries being contrasted against the safe haven securities having record low yields throughout the week in the German Bund, the US T-note and the UK gilt. Looking ahead to next week, we're likely to get off to a slow start as we see market closures in the UK on Monday and Tuesday due to the Queen's Diamond Jubilee. But as the week progresses, we're likely to see more focus on the European central banks as Wednesday sees the ECB's latest rate decision. They're currently expected to keep rates on hold at 1%. But bear in mind that the central bank is under continued pressure this month as concerns remain over the Spanish banking system and the political turmoil in Greece. However, they're likely to keep rates on hold as they await any clear signs from European leaders regarding a growth strategy for the continent. We will also be awaiting the latest forecast from the ECB staff regarding growth and inflation for this year in the Eurozone, so eyes will be on the wires to see if these change. As we move on to Thursday, we'll see the Bank of England's latest rate decision and its latest decision on the asset purchase facility. Both are currently expected to be kept on hold at 0.5% and £325 billion respectively. Bear in mind we have had a slew of poor macroeconomic data from the UK in recent weeks, which has led some large institutions to change their forecast regarding QE. This includes JP Morgan, Deutsche Bank and Citigroup, who are forecasting an expansion in QE on Thursday next week. However, as always, we'll bring you anything as soon as it hits the wires and any relevant commentary to your trading. But in the meantime, that's all from me. Make sure you have a great weekend.